What is up, guys? Mike Wang here, back with another video, this time on trading. This is my first video on trading, and today I'll be talking about this 18-year-old YouTuber who is on a stock trading challenge to make $1 million. This is Biaheza. He's an 18-year-old YouTuber in California who mainly makes content related to dropshipping, but has recently started expanding more on topics like investing and trading as well. He is currently on a stock trading challenge where he attempts to turn $100,000 into $1 million. According to his latest video, he's currently at $126,000, and I'll be talking about how he was able to gain great returns on his initial investment by dissecting every aspect of him and his strategy. I'll be talking about what he was specifically doing, how he was able to profit so much, and what he could do better to profit more and faster. So stick around until the end of this video, and if you don't learn anything new, press the dislike button. But if you do learn anything new or find this video to be helpful, don't forget to like and subscribe. So in his first video of his journey, which I have the link down below in the video's description, Biaheza says that he has about $100,000 in his Robinhood account and that he'll be trading stock options according to his strategy. He claims to have realized a certain pattern in the market in which a spike would take place when the market opens and dip immediately, only to see prices recover back up. Of course, this doesn't happen every day. Sometimes the market opens with extreme bullish momentum due to good news, and sometimes the market just dumps overall. But during the days when the market is relatively less volatile and calm, he can apply this strategy. For his trades, he's mainly trading the S&P 500 options with a short expiration date and a few other large cap stock options. His plan is to buy the dip according to his strategy and enter a $1,000 big position for every opportunity he gets. Once he profits around 10%, he's out of the position. So with this in mind, let's take a look at why he's been making good trades and profiting over the long run. The first reason is that he keeps it simple. Notice how it's so easy to understand his strategy in approaching the market. That wasn't because I explained it so well, but because Biaheza managed to keep it very simple. Simplicity is key in trading. You want to keep your strategy as simple as possible. Overcomplicated strategies can often be confusing and difficult to execute properly. Biaheza's strategy of buying low and selling high is as simple as it gets. He buys when the market's oversold and sells when it's bought back up. Reason number 2, he tested his strategy. Backtesting, for those of you who don't know, is the method of testing a model or strategy on past data, seeing whether the strategy would have worked on past markets or movements. Of course, just because your strategy works on past data doesn't mean that it'll continue to work in the future. But that's the least you can do to test your strategy. What Biaheza did was he also forward tested his strategy. Forward testing is when you take your model or strategy and actually test it on a live market. He said that he's tested this strategy out and managed to make a few $1,000s, which inspired him to make the series. You also want to make sure that your strategy works by backtesting it. And I know that in terms of institutional finance, backtesting is done in a very, very meticulous and quantitative manner. A lot of people just take a look at the charts on the surface and assume a certain strategy would have made them X% gains, but that's really not how it works. And at the same time, I also understand that Biaheza does not trade for a living, so he did the best he could to test his strategy as much as a retail investor could have done. Reason number 3, he stuck to the plan. This is probably the most important reason why he was able to make money trading in the first place. He stuck to his rule. He had a strategy. He had plans for how he would open positions, take profits, and get out of certain trades, and he stuck to the plan. This is a mistake that a lot of traders make, and it's probably one of the biggest reasons why most people fail to make money trading. When a stock soars up in price and they are in profits, they suddenly get greedy. While their initial plan was to get out with a 10% profit, Now they start thinking that they could probably get away with 20% profits. Similarly, when they're losing money, they first plan on cutting their losses at negative 10%, for instance. But when they see their balance at negative 5%, they start to panic. They start thinking that their losses will be so big it'll be difficult to recover at all. Or they start getting high on hope, and while their initial plan was to cut their losses at a 10% loss, they hold their positions down to a 20-30% loss, thinking the prices will eventually bounce and that they'll get out with profits at the end. Biaheza didn't do any of these, and he simply played his A game according to the plan. Reason number 4, he kept his emotions out. The reason he was able to execute so well according to his plan was because he remained emotionally unperturbed. He wasn't greedy when the market was good, and he didn't feel fear when the market was bad. He simply looked at the dips he could buy, he bought the dips, and he took profits where he was supposed to. There are 2 main reasons as to how he was able to keep his emotions from disturbing him and distracting him from making the wrong emotional decisions. Firstly, Biaheza does not trade for a living. Biaheza is in essence an entrepreneur, and most of his streams of revenue come from his business, rental properties, and other stocks that he holds for the long term on another brokerage. Of course, turning $100,000 into $1 million will be great, but he doesn't have the pressure to do whatever it takes to achieve it, like his life depends on it. Just like how you wouldn't be too upset seeing some consecutive trading losses on your paper trading account. For him, this is just another content idea that he has for YouTube. Regardless of whether he makes money or not, he'll have something to talk about it for his YouTube channel. So that makes him free of pressure and thus free from emotional disturbance. Secondly, while $100,000 is a lot of money, it's certainly just the right amount for Biaheza's risk tolerance. He feels fine and comfortable trading with $100,000 and manages risk very nicely as well. He enters a $1,000 position for every trade and is satisfied with the returns and comfortable with the losses that he makes for every trade. So with this in mind, let's take a look at what he could improve on. After watching his videos, I found 3 things he could work on to make more profitable trades. The first tip is to learn more about options. And I don't mean to sound pretentious when I say Biaheza needs to learn more about options, but learning a bit more about how options work could definitely help him more. A lot of people just think that they need to bet on call options if they think the market's going up, and bet on put options if they think the market's going down, but options are actually more complex than that, and they can be used for better purposes. Understanding the structure of options and exactly how they work can help Biaheza design strategies that could take him to the next step, where he can open positions with limited downside and high upside potential. Tip number 2, design more strategies. While his strategy is very effective, it's best if he has a set of other strategies in his toolbox that he can use. In his video, he says that this strategy is only useful when the market is relatively calm. So what he could possibly work on is a strategy that works when the market is volatile. There are a plethora of existing strategies that he can learn from and implement. Volatility breakout strategies, long-short equity strategies, event-driven strategies, and so on and so forth. Having a bunch of strategies in his arsenal can definitely give him more trading opportunities and thus help him generate more profits during a shorter time span. Lastly, learn to conduct technical analysis. In case you don't know, technical analysis refers to looking at the charts, interpreting past historical price data to predict what we could expect in the future. Technical analysis allows us to better understand what's going on in the market, what might be a good price to enter at a position or exit a position. In Biaheza's strategy, he says that his plan is to buy the dip after the market opens. The question is, where at the dip do you buy? How do you know you'll buy at the exact bottom? What happens if you buy thinking that it was the bottom and that the dip was over, but prices start continuously falling? To answer all these questions, you need to learn technical analysis. It allows you to understand specifically where the prices may bounce or get rejected. Adding this to his arsenal will definitely help him cut unnecessary losses and identify prices at which he can take maximum profits for his positions. So that was it, guys. I went over the 4 reasons why Biaheza was able to make money trading, and the 3 tips I'd give him to work on so that he could improve his A game. Tell me what you think. Do you think he'll be able to reach $1 million, or do you think it was pure luck? Let me know in the comment section below, and as always, I'll see you guys in the next video.